Thank you very much for coming. When we think about Eastmain Resources, we're thinking high-grade gold in a great jurisdiction, James Bay, Quebec. I will be making some forward-looking statements today. So Eastmain Resources, essentially a new board and new management about 2.5 years ago. Radical changes in the company, new vision, new strategy, and moving forward on some great assets. We are one of the most aggressive juniors in James Bay, especially when it comes to gold. The only other asset of significance in the region for gold mining is the Eleanor Gold Mine, owned by Goldcorp, currently producing about 350,000 ounces. We are near Eleanor and in the same region and advancing our projects. So we've got 3 key assets. Eau Claire is our main asset. I'll be talking about that. We issued a PEA in May. Eleanor South JV near the Eleanor Gold Mine, a joint venture with Goldcorp and Azimuth, and the Eastmain Mine. The Eastmain Mine has a resource on it. It's a VMS-rich VMS system, gold-rich, but that project is currently on hold just simply because of market conditions. Valuations, I don't think I need to tell you too much about how terrible our valuations are, but that's also an opportunity for investors, hence why we want to tell our story and really show what we have in the ground and what the future holds. As I mentioned, James Bay, great jurisdiction. Hydro-Quebec has been in the region for over 60 years developing important hydro power projects. Therefore, you end up with an infrastructure of that includes roads as well as power lines and airports near our project. So we have actual access to our projects by road everywhere we go. When it comes to capital structure, we are on the main board on the TSX under ER, as well in the US on the OTCQX. We have 221 million shares outstanding, around $40 million market cap. I think we're around 18 cents today, which is very low valuation. 6 analysts are currently covering us. Their price target consensus is 82 cents. And we are at 18, so you can imagine the disconnect there. We're well-funded, $6.5 million in the bank, and a part of that is hard dollars, $3 million. The balance is flow-through with no concerns with spending our flow-through into next year. When it comes to shareholders, about 65% retail shareholders. Then we've got a really good support, institutional support, some really good funds that have been with us for a long time. Insiders as well. We keep on buying into our own company. I now own about 1% of the company. The top shareholder there shown is Eldorado. That's the old Integra position. So Integra was a strategic shareholder of ours. When they got bought up by Eldorado, flipped into their portfolio. It's a passive investment at this point from Eldorado's perspective. So this is a good summary slide of our key projects. Again, Eau Claire, number 1, is our highest priority. Number 2, Eleanor South. Number 3, Eastmain Mine on hold. So the value proposition for Eastmain Resources is really we have high-grade gold assets, 6 to 8 grams or so. We're in a stable and safe jurisdiction with good infrastructure. In the last 2 years alone, we've issued 2 resources and announced 1 major discovery, which is pretty significant. The value driver moving forward, we've issued our PEA in May, move forward on post-PEA work. So we're talking environmental work as well as engineering. And we also have a 3-in-3 exploration vision, which means we want to get to 3 million ounces within the company, total ounces in the next 3 years. And we got about 2 years and 3 months left on that plan. And I think we're doing fairly well with our exploration work. So Eau Claire, I'm going to cover that in more detail because we issued the PEA. So obviously, being in Quebec, very a good place to be. Supportive government through various types of incentives for mining. As well, some of the major Quebec funds start anchoring in as you move forward. As you saw in the list earlier, major shareholders, number 7, Caisse de dépôt from Montreal. So those funds anchor in, and then they support you through your development process. As well, in James Bay, very clearly defined permitting process. It's tripartite, federal, provincial, and Cree government representation. So it's a very well-defined process. It works extremely well. So project location, I mentioned that. We have good road access, and we're in a good place. Near power, by the way, about 18 kilometers from a major hydropower dam. So that means cheap Quebec power eventually available at the site. So this is our total land package in and around the Eau Claire deposit. So we've got 2 claim blocks, Lac Clarke. Not much work going on Lac Clarke this year, but on Clearwater we're actually doing exploration, and within Clearwater we've got the Eau Claire deposit. This gives you a little bit of history on why we changed the board and management. The project in gray was previous management. They were moving it forward, but it wasn't quite moving at a pace towards defining a project. I took over, built a new team from scratch, ended up drilling extensively, about 90,000 more meters. So we're up to over 300,000 meters on the project to get to a PEA. So the PEA came out, and it's very robust. Even realistic, we like to call it, or conservative. After-tax numbers, NPV, $260 million, IRR, 27%, payback, 3.1 years, low CapEx at $175 million, and all-in sustaining cost, $574 US per ounce, which is extremely low. Mine life, about 12 years, daily throughput, 1,500 ton per day, average annual production, 86,000 ounces a year for the first 10 years. And the grades that you see here are fully diluted grades in the pit, very high grade at 3.78 grams, and then underground 5.24 grams. When we compare to other Canadian gold projects that are moving forward, our metrics compare extremely well, and we are pretty pleased with that, pretty pleased with the results, and we are considered one of the top Canadian projects, best prospect for a new mine currently. So this is some of the details. I won't go through this in detail, but it gives you an idea of the breakdown for the PEA on the CapEx, the throughput, production profile. Site layout, very straightforward. Nothing unusual here. This is rolling hills. So we got obviously our mill, our camp, the 2 pits to start, a portal separate from the pits to go underground, and obviously waste stockpile and tailings. So when we think about open pit mining, we're thinking about initially 3 years or so, winding down in year 3 while we are developing underground. So the pits are fairly small, as you can see here. We got about 200,000 ounces in the pits. So that means high grade to the mill as starter pits essentially, and that's about 20% of our resource. The way to think about this mine is right now is about 1 million ounces mineable, and about 20% is in the pits. Then we go underground. So underground, as you can see the structures, it's an en echelon vein system. We follow that with a ramp. Going down to the bottom that you see there is about 860 meters. It's still open at depth. We believe that it continues much deeper, but at this point we're focused obviously on the closest to surface portion of the mine. You can see dilution numbers underground, 40%. Some people call that high. I would agree. Can we improve on that? Potentially. I would also agree with that. So that's more work to be done. You can see we ramp up essentially in year 3, run out to year 12. That's the rest of the mine life. This is an interesting slide because, first of all, I mentioned 200,000 ounces of pit. That's in the green box. The rest is per 100-meter slices through the deposit. You can see it's very well mined in the top 600, very well drilled in the top 600 meters. But below that, the bars are shorter simply because the number of ounces are less only because we haven't drilled them off. The spacing is much lesser at depth, as you can imagine, but with a few holes, we could easily expand the deposit laterally between 600 and 860 meters. So what's the potential for expansion on increasing ounces or changing the throughput? Obviously, we got different approaches there. More explorations require more drilling. We are considering a special project being an exploration ramp and doing a bulk sample. So that would take $15 million out of the capex of the mine and move it forward and potentially start that ramp about this time next year. So that's currently being studied and will be permitted by then. But expansion-wise, we're looking at different opportunity. I mentioned expansion potential at depth. That's key, something that we will be doing in the next couple of years, but also regionally. So this is the local Clearwater property itself, and in the black circle is the Eau Claire deposit itself. The other 6 red circles are current targets that we're trenching on and drilling right now in the field. And what we're looking for is mineralization near surface that we can actually add to the mill throughput and maybe increase the mill throughput and ultimately increase the production per year. So when we look at the overall schedule, we're looking at about 3 years to get to a development decision. That includes doing this ramp and the bulk sample, ultimately, obviously, environmental work, feasibility study before the development decision, and then about a year to build, fairly simple, straightforward mine and mill, and then production in about 4 years. So that's currently our schedule and our timing. So let me talk about the second other project that's important is the Eleanor South JV. I'll cover that fairly quickly. We are near the Eleanor mine, about 12 kilometers away. It is a JV, as you can see in the bottom of the green box. The percentages, 36.7% for us. We are the operator on this project. And we've focused on the red oval that you see there. And late last year, we actually announced a major discovery. We're looking at a gold system with high grade, medium grade, and low grade all over the place. We're continuing to do work on that. We're currently trenching and drilling on this project. We've got a $2.5 million program. That's total. Our portion is about 900,000 ounces, $900,000, sorry. And that's only from August. That's the rest of the year, so August until December. So based on those results, we'll define a bigger program for 2019 as the plan, and we expect to go back and drill extensively next year. The idea is to ultimately get to a maiden resource on this discovery. You can imagine it's a fairly wide corridor, 45 kilometers long, half a kilometer to a kilometer wide. So a lot of property, a lot of gold all over. So we need to get to the right spacing on drilling to get to a resource. But that's our focus currently. Goldcorp is very supportive of our efforts here. Everything we do is reviewed with them, and Azimut as well as our other partner on this. So we are moving this project forward with an expectation of getting to a resource late next year sometime. This is an example of where we're drilling. So in the past, they used to drill in the blue, which is metasediments. What we discovered is it's actually in the, let's call it purple on the screen. In the purple is the intrusive, the tonalite, which is a different setting than the Eleanor mine. So that's why they weren't going there in the past. We went there. We made the discovery. We're now drilling at the contact and into the intrusive, very extensive, massive gold system. So our plan for the rest of the year is to continue to execute on the 2 key projects, the Eau Claire project, post-PEA work, plus trenching and drilling. Same thing, Eleanor South, trenching and drilling, leading to a resource later next year. Eastmain mine currently on hold because of market conditions. We will revisit that asset down the road. Thank you very much.
I have time for one quick question, if anybody has one quick question. If you come up with any questions, I'm sure Claude will be happy to answer them later on in the day.